Let's make sure that's come up. There we go. Okay, basically, as Anna said, I've just...
Sorry, Diane, did you see answer any questions?
I haven't answered any questions, no. Apologies. I was busy scanning the charts. In the other markets, got quite a few markets up here. This is the YM, which is the emini future contract for exactly the same as you saw on Anna's MT5, but it just happens to be the futures chart. And the only difference, other than the obvious numerical values that you see, are the cost of getting into the particular contract. If you're trading futures, it's going to be a lot more expensive. They are much larger contracts. You're going to need a lot more margin requirements, whereas trading them on the MT5 platform requires far less. So, it's a great way to dip a toe in the water for trading indices of any sort, whether it's the Dow or the Renko or the ES. So exactly the same price action. You can see I've got 15-second here, 2-minute and 5-minute strong across the top, and then down we've got 10-minute. We've got the 15-minute over here, and then we've got the daily chart over here. Perhaps if we start with the daily one, let me just move the chat out of the way. And it's really been the NQ that's been leading the way. From a personal standpoint, I will always migrate to either the YM or the NQ, probably more the YM, but certainly the NQ alongside, partly because the NQ will often be leading, and it has been today. It's been up quite considerably. And the NQ, what's interesting is the YM and the ES. I'll go to the charts in a moment. In fact, let me start there. It's probably easier. You can see all three together then. Let's go down here. Where are we? Here we are. Okay, this is the three of them. We've got the YM on the left, the NQ, which is the NASDAQ 100 in the middle, and the ES, which is S&P 500. And you can see what I mean by the price action. This is the price action on the NQ. It's been pretty much consistent. We had a fantastic run up this morning. It's come off a little bit, but now it's continuing to pick up. It has got that bullish momentum to it. But you can see here, this is the YM. And the big difference is really when you look at the daily charts. What we've got on the daily here for the NQ, if the NQ breaks above 9,200 in the next 2 or 3 days, then we get through this level here, and then we're really free and away into some pretty light resistance, both in terms of volume. You can see the low volume node here, so we've got 200 or 300 points here of pretty low volume to get through. So the volume to drive it through there, in other words, the volume down here, doesn't need to be particularly high. It's obviously got to be in line with price action, but it doesn't have to be aggressively high to drive it through this solid area, because once we break away from this region here of high volume and start to move into these much lower regions, then the price action through there should be much more straightforward and easier progress. In other words, we've got some price-based resistance here at 9,200 with this dashed line on the accumulation distribution indicator. And this was the key level, this much thicker line, because what the indicator does, it strengthens the line according to the strength of the support or resistance. So the stronger that region, the thicker the line. It's a very simple process, but it's a very sophisticated indicator. So what it's telling you all the time is where these areas are, but more importantly, it's telling you the strength of those areas. So the thicker the line, the stronger the area, whether as an area of resistance, or in this case, as a platform of support, as now. It was breached on, where are we now, Thursday, Tuesday. Wednesday, it was tested and held, and it's been tested and held again today. If we can break through this region, it's doubly important because we've got price-based resistance there, but then once we're through that level, we're into low volume region in terms of the volume price histogram. So it's just an interesting point at the moment for continuation of the bearish, the bullish trend, which has been picked up by the trend monitor down here on the dailies. The difference when you move down onto the YM, for example, the YM has really yet to break away from the volume point of control here in any meaningful way. And in addition to that, we've got a very strong region overhead of resistance, which is acting it's acting here, here, and here. It's really struggling to break through there. And even when it does break through there, we've got pretty high volume here. We haven't got a low volume node like we've got on the NQ, but we've got pretty dense volume, and it really continues all the way up to around about 27,000. The only relief is up here in the heady heights of 27 to 28,000 before we get back into it at 29,000, where we consolidated for a long time, which is why we've got this huge level of price-based resistance coupled with this huge area of volume sitting there. So if and when the price does get back up there, and it will at some point, then there is going to be a battle royal to break through and out into the 30,000 level and beyond. So that's where that one is. The ES is kind of in the middle, if you will. It's starting to break away from the volume point of control. It's got less in the way of price-based resistance ahead. It's got a very good platform of support in here below. This has been tested several times, multiple times and held, which is why it's so thick. But then again, as it starts to break higher for the S&P 500, an awful lot of volume is accumulated in this region, so that's going to be pretty hard going. Again, we've got a low volume node here at a much higher level. So in terms of progress higher, it's really the NQ that is the interesting one to watch. And as has happened on many other occasions, the NQ tends to lead the way, and tech stocks, and it's doing so at the moment once more. So from a trading perspective, from an intraday trading perspective, have all three up, because what is going on in the NQ, what you will often see is you will see the NQ, if it's leading, it will tend to drag the others with it. They may not move with such alacrity. So if you're trading the NQ, that is going to move the swiftest of the three, certainly at the moment. But it has that ability to give you a judgment call on whether you're going to trade short or long as an intraday trader. Let's just pop back onto the charts I was looking at before, which are here. There we go. So we're back to the YM. So we're looking at a single instrument here. Pretty bearish at the moment. We've had that bullish run up. It's starting to roll over. You can see it hitting here. This is the daily chart we were looking at just now. And when you start to look at the charts, you're looking at what is going on in terms of volume. Just pop this one open, 15-minute. What do we have here? Well, we get the normal surge in terms of the open. This is 2:30 our time. But then as we run up into this area, we're starting to see volume fall away. This all looks pretty weak. We've got two dojis, and we've got an upthrust candle here, on pretty low volume. It's not looking terribly strong. It's looking weak. Now we're starting to see it roll. Where are we going to come back to? Well, the chances are, if we're going to break through this lot, we're coming back down onto the volume point of control, which is 50 points lower. Trend monitor signaling that on 15-second. That's pretty quick. It's starting to rotate through into 2-minute, that bearish sentiment. Over to the 5-minute, the trend monitor has now transitioned out of bullish and has gone into a darker phase. And ultimately, if this continues in its downward direction, then this will also transition through possibly into darker red, or maybe even go straight through into bright red. We will see. And no change on 10-minute, you wouldn't expect it yet. It's too early. But if this is a change in sentiment, it's going to ripple its way through and across the markets, or the time frames rather. Let's just go on to the Renko charts. We saw them on MT5. This is the Renko charts on NinjaTrader. Exactly the same principles. It just smooths the price action. Now what I've got here, these are pretty fast. This is on 15-second, this is on 30-second, and this is on a minute. And you've got the equivalent time frame charts strung out below. So this is 1 minute, this is 30-second, this is 15-second. But bear in mind that these settings here, basically to set this up, all you do is you just choose the time frame. I've got this set to 15 seconds, so I'm just going to click on that. And the indicator will deliver the optimal setting. It's still at 6, so that's fine. So we just click on that. And that's delivering me 6 points on the brick. That's the optimal setting right now. I don't even have to think about it. I haven't got to think, am I going to go for 5, 4, 2, 10, whatever. This is on a 15-second time frame. It's telling me right now on the YM, at this point in the session, we need to be trading on a 6 brick size, and it's a 6-point size, and it's giving me that optimal setting, so I'm trading with the market at the optimal speed. This is slightly faster. This is on 30-second, and you can see the brick size here is 9. And if we go up to the minute, we've got a brick size of 13. May not seem like a lot, but if you're trading a YM at $5 a point, each of those bricks is worth $30. So, you pick up 3 or 4 of those, that's $100 in your pocket. Not bad going for probably a few minutes work. Got the trend dots on here. The trend dots will change first, the trend monitor will change second. And the reason for that is because the trend dots work very, very close to the price action. You can see here as the market ticks up, we start to see a transition into gray. We've even gone into blue, but then we come back out of it again as the market ticks down into red. But there is no change in terms of the trend monitor. That's stayed bright red throughout. Exactly the same principles here. We haven't had any changes here. It's just holding firm. Exactly the same here. We have the transitional colors up here into gray, a little bit of red, back into blue, back into gray. Now we've gone firmly red. And in addition to that, we're now starting to see the trend monitor transition through to red also. So it's exactly the same principles as you would with a time-based chart. We are just using multiple Renko charts in combination with those time-based charts. Now you can use these in combination to help you manage positions, to help you get in, to help you to scale in, to help you to scale out. It just, as Anna said, it just smooths everything out. It removes that choppiness. You're dealing with brick sizes. The indicators work in exactly the same way, but it just gives you that smoothness of price action that can be disorientating, particularly if you're trading particularly fast charts. I mean, I tend to have the 15-second and 30-second up on indices. I'm not suggesting you have to go to those sorts of speeds, but certainly it's something that's available. That bearish sentiment is still holding. We're coming down towards 23.9. Once we get to full numbers, 900s, 850s, those sorts of figures, expect the market to congest for no other reason that you're hitting whole numbers. Generally speaking, traders of all levels, from the institutions through to retailers, will tend to put levels of bids and orders in at whole numbers. They don't go for 1s, 3s, 5s, 7s. They'll go for 0s and 5s. So whenever a market gets to a big number, something like 23,900 just coming up, expect a market to congest for no other reason than it's hitting a whole number. If it's a 50 or 100, you know, those are the big numbers. And of course, if it goes for 1,000, that's an even bigger number still. So those are key levels, but just expect it. Doesn't always happen, but just be on the lookout for it to happen, because that's where orders sit. Now we're starting to see this move develop quite nicely. Really nice to sit on the Renko here. Just watch that develop for a bit. Let's just check out what's going on in terms of volume down here, over onto the slightly slower time frames here maybe. We've also got a very nice level here. Let me just pop this up full size. Let's pull this over a bit. There we go. Get the right one. There we go. We've gone through quite a decent level here, and again, you know, this is flip-flopping between time-based charts and Renko charts, but you've got this very solid platform here. The two levels together were not particularly strong, although this lower level, this thicker dash blue line was stronger than the level above it. But when you combine those two together, that becomes a strong platform, because you've got what we call a cluster. So you've got a cluster of 2 here. Sometimes you get 3, sometimes you get 4. We've got a very minor level here below. It's only been tested once so far and held. This is more serious above. So we've got thicker levels above. And as each of those comes into play, you're looking at that in association as a blend with what is going on in terms of your Renko. So it's just applying the volume price analysis methodology below, and you're looking at it and trading through the prism of a Renko chart above, a non-time-based chart, in other words, because what you'll see on a Renko chart, and I'll hop over onto the tick charts in a minute, is you see momentum revealed. You don't see momentum on a time-based chart. You only ever see that on a non-time-based chart, because a Renko and a tick chart and other charts are independent of time. So each of these bricks will form at different speeds, because there is no time element to the Renko chart. It's purely building bricks according to the metric set of the number of pips or points or whatever it may be that you're trading. So that's a nice move developing. Let's just go back onto the time-based charts again to see how that looks across the time horizons, because you're all... Yeah, of course. Just going to pass over to Anna. Hold on a minute.